Hello, everybody. Welcome to the NRI FinTax Q&A show, wherein we'll start with a discussion on a topic, and thereafter the house will be open for questions and answers. So we start with the topic of today. And as we know, we have ushered into the new year with a lot of expectation. That is the new year 2021. And the topic today for us, which is very relevant and very much up in everybody's mind, being investment planning for NRIs in 2021. Now, when it comes to non-resident Indians, one needs to understand that for all the non-resident Indians, it is not just the market in India or the investment opportunities in India which matter, but for all the non-residents, it is the world at large where they need to think in respect of investments and plan their investments accordingly. So looking to the scenario in the world, how the scenario in the world is building up, since last at least a couple of months is that there is fund flows from all the foreign institutional investors and from all the foreign investors in a big way towards the emerging markets. And as a consequence, the US dollar is weakening vis-a-vis the emerging market currencies, and the emerging markets, especially the equity markets, are soaring new highs every day. And this is the trend which most of all the investors believe would be the trend in 2021, where the funds from the developed markets will flow towards the emerging markets, and the emerging markets currencies will gain strength. Now, does this mean that one should focus only on the emerging markets in the times to come? My answer would be a clear-cut no, because so many things which seem to be very obvious have not happened, and they have happened absolutely the other way around. Moreover, one of the most important things which everybody, when they are allocating funds and looking at how the investment scenario will move in 2021 would be, how will the health crisis and the entire scenario on the health front take shape? Because today, whatever we are discussing, we would be discussing on the basis of that in a few months' time, a large section of the population of the world would get immunized by the vaccines which have been developed and have been approved by various health authorities. And all those people who really matter in the world in terms of protecting health and seeing that the economy of the world and for all the countries gets a kickstart once again would get immunization in another 3 to 6 months' time. And there is no other strain or no other kind of health crisis which emerges. So it is very clear that the entire investment scenario and what is going to happen will be So this was in respect of how the global investment scene on the flow fronts and the emerging markets vis-a-vis the developed market front would emerge. One of the important things that one needs to look into is that as far as the NRIs are concerned, how will their investments matter or would get impacted or affected when it comes to investment in India. When it comes to investment in India, there are at least two major options which a non-resident Indian can think of, that being investment into equities and investment into debt-based instruments. Over and above that, a non-resident Indian can also invest into Indian real estate. So we will examine these different investment avenues one by one. The first being investment into equities. As far as the investment in equities are concerned, the scenario that has developed since last 5-6 months in India is that there is a lot of enthusiasm and there is a lot of excitement in the entire Indian economy and all those people who are into manufacturing and delivering services. The reason is that whatever has happened in respect of the relationship between India and China and the world at large has impacted the way the course of Indian economy is going to move in the times to come. As far as the relationship between India and China, the way it is going to impact is that the government is giving a lot of impetus for manufacturing and, for that matter, even projects on IT side, infrastructure side, where there was a Chinese presence, that we should have an Indian answer to all those options which were earlier provided by China. Then, as far as the world at large is concerned, people are in a bigger or a smaller scale are thinking of replacing their dependence upon China and shifting their manufacturing and sourcing from countries other than China. And in that process, India is an obvious beneficiary, and that is going to result into a lot of development in times to come, especially in 3 to 5 years' time. This can very much be seen from the way things have started developing since last at least 3-4 months. The latest figures on the GST, the goods and services tax front, which is an indicator how the economy is performing in terms of its sales and in terms of its consumption, gives us a picture that the economy is definitely picking up in the recent months. The automotive sales, consumption of electricity are some of the factors which clearly show that the economy in India is picking up, and the way people perceive and the stock markets perceive India is definitely on a positive note. So investing into India, and especially Indian equity-based investments for 3 to 5 years' time, is definitely a worthwhile scenario in my understanding. Now, the obvious question which comes up in everybody's mind is that what about the valuations? The valuations in respect of the major stocks, or rather the large cap stocks of the country, have really appreciated and have reached a height which at times leads somebody to question whether are these valuations worthwhile investing or putting more money into it. But these rich valuations are nothing but factorization of the good potential which people see in the times to come. Having said this, there is a lot of room for growth in the small cap and the mid cap size of the market, which are small companies and the mid-sized companies, wherein there is still a scope of appreciation, and the appreciation in the values of these equities over a 2 to 3 year period have not been so significant. So the moment there is a green shoot and there is a development in the earnings of the various corporates, and the economy starts it's the trajectory which everybody is aspiring to in the country, the small caps and mid caps would definitely gain steam, and the large caps would consolidate over maybe a period of time. So there are pockets and there is still a room for appreciation in the Indian stock market, as my understanding says. Having said all these things, at the outset, what I said, that so many things are dependent upon the way the health scenario uh, progresses in another 3 to 6 months' time, which is very important. Now, the next avenue which a non-resident can think of investing in India is the debt-based investments. Predominantly, the debt-based investments for non-resident Indians is into NRO and NRE deposits. And when it comes to NRO and NRE deposits, the rate of interest have come down because the repo rate by the Reserve Bank, the central bank in India, has been reduced. We don't see any further reduction in the rate of interest because the inflation in the country is at a level that the return on fixed income instruments in India is on a negative stance. So, in the times to come, we do not see a major reduction in the interest rates, and this interest rates would, in another 6-8 months' time, if the inflation continues the way it is on account of the rising prices of raw materials, could see a little upward tick, but definitely not a downward tick. When it comes to real estate, the real estate market in last at least 3 to 4 years' time in India has not given returns which are appreciable and worthwhile for all those people who have made investments. But this scene is likely to change for the good. The reason is that if we go with the premises that there is going to be a growth in the economy, this is definitely going to translate into a larger demand for residential real estate across the country, because the incomes would increase of all the people who are participating in the country, in the economy, and the aspirations of the people would run after having a better living, which is something which has been so important in the recent times, because the pandemic has taught us all those things, that their own house, the principal place of residence for anybody and their family holds a lot of importance. So residential demand in India in times to come on the real estate side is expected to be on a buoyant side. But when it comes to office related real estate or commercial real estate, those demands would be a little slower, for the reason which we all understand is that the work from home culture has also been very strongly imbibed in India, and the corporates in India have understood the advantage of not spending a lot on real estate or the rentals, but finding alternate solutions and keeping their cost structure at a lower end. Moreover, the prices of raw materials which go into the building of residential properties is also escalating, which leads into a better prices, or rather rise in the prices of the real estate. But one thing is very certain, that this is not something which is going to lead to a phenomenal increase in the prices of real estate, for the reason that on the sidelines of whatever is developing, the development which is happening on the industries and the services front, the development on the infrastructure front is also very strong, wherein a lot of capex from the government and from the private sector is being pumped into infrastructure in a very big way. And this leads to better road access, basic necessities commutation between even areas which are a little far flung from the city. And this leads to softening down of prices at just uh, across the real estate sector. And there is no specific rise or concentrated rise in the prices in a particular area. So the development of infrastructure across the country is going to keep the prices of real estate under a check, because all those users would have better options moving a little further, and that will keep a check on the real estate prices. Now, as far as the investment in precious metals like gold and silver is concerned, gold and silver, as we all know, have been a flight to safety. And this is what we have seen in last 8-9 months after the pandemic struck the entire world. The prices of gold and silver appreciated in a very substantive way. But the moment the pandemic reached a level where people could understand that this could be the kind of damage the pandemic can cause, the prices of gold and silver rather stagnated or were a little on the downside. So this is the way normally gold and silver behaves, that it is a flight to safety, and it is a friend at the times when the world or the entire economy or everywhere around there is a fear. But one learning which everybody could gather in these times was that one should not just look at an investment in gold and silver by way of the returns which the gold and silver delivers, but it is a very good store of value in challenging times. And it is like a currency that in bad times you can definitely fall back on, and you are not in a state where you are lost with everything. So gold and silver are today finding an allocation into major investment portfolios across the globe, and people have understood that irrespective of the fact that it doesn't give a lot of return on its investment, and the investment return across a long period of time is quite on a lower ebb. But in order to store value and in order to have something which is like a currency across all points of time, gold and silver definitely holds value. So this is the basic investment scene which I wanted to put forward to you, the non-resident Indians, as to the way the global investment trends would emerge and the investment trends in India would emerge. This is what was the scenario which I wanted to build and put forward before you. With these words, I would leave this house open for question and answer. You can raise your hands, press the icon of raising your hands, and our team will unmute you, and you can put a question before me. If you think that you want to write something in the chat box and put a question, our team will put forward that question to me, and we will try to address those questions. The questions need just not be on the investment scene 2021, which is the topic which I am talking today, but the questions can be on all the topics in respect of income tax or regulations for non-resident Indians, whatever they think are useful to them, and it is a question up in their mind. Please.
We have a question from one of the participants who is asking about the future trend in the price of stocks of cement and steel particularly.
Okay. Uh, Definitely, the stocks of companies which are into manufacturing of cement and steel would appreciate, and this is already, they have already appreciated worthwhile in last 3 to 4 months, and it is on the expectation of whatever I have been saying, and definitely the entire commodity cycle is on the upswing, and the prices of cement and steel companies would appreciate. Having said this, all those companies which are very much efficient in their manufacturing, when it comes to steel and cement, it is absolutely a commodity. There is no differentiation by and large between one cement and another, one steel and another. So what leads to better profitability is the way the entire operations of a particular company in the manufacturing process really operates. So all those companies who are efficient producers of these commodities would definitely try to do better, and this is very much reflected in the prices or the differential in the prices of these stocks. Moreover, one thing everybody should keep in mind is that when somebody is investing into any cyclical stocks like cement and steel, what can happen is that the moment this cycle comes to an end, the prices of these stocks of these companies, as the way they are called, it's absolutely cyclical. So today it is an uptrend, but we should be prepared that there could be a downtrend the moment there is a stagnation or there is a slowing down of demand, or large amount of capacities come up in this in the manufacturing of those commodities.
Okay. We have two more questions which are further on those lines, which are on the pharma and the auto sector particularly, and on the future of the stocks on in this particular sectors.
Okay. As far as the pharma sector is concerned, it is definitely something which is a sector which we see that in the times to come, at least 3 to 5 years time, India has got a lot of advantage when it comes to pharma. And the good part about pharma as a sector is that even if there are some crises which develop on the health front, pharma and IT are the sectors, and FMCG, three sectors, pharma, IT, and FMCG, are the sectors which could be the least impacted, even if things start going a little haywire on the health front, or things get a little delayed on the health front in the way the entire vaccination and those processes go ahead. These, especially IT and pharma, are the sectors which are the in thing or in sectors in the times to come as far as India is concerned. Yeah.
Will the IT stocks fall once the vaccine is out? And what is your take on that? And also the automotive sector.
Okay. As far as the IT sector is concerned, I definitely don't see any reason, even if there is a vaccine or anything, that the IT stock should fall. The reason is that people have, or rather, I would say absolutely the other way around, that people have started appreciating and understanding what an IT outsourcing or what IT can really do in cost saving and really growing the business to different heights, or rather scale the business to the next level. So IT as an activity, the way India is doing, the outsourcing kind of piece which India is doing, is definitely not going to suffer even if there are health crises. and it is all set to grow in the times to come. When we look at the auto sector is definitely dependent upon the way the economy emerges out of the pandemic. Today, there is a lot of pent-up demand, which we see in the auto sector, which is getting converted into sales, and which is reflective. This gives a lot of enthusiasm for people to think that auto is a sector which is going to come up in a big way. This can really happen if whatever I said, that in 3 to 5 years, India will be on a different growth trajectory. If this really happens, then definitely auto sector would benefit massively, and it will definitely do very well.
For investors who do not have particular knowledge about stocks in all the sectors that you discussed, is there any structured route for them to participate in particular sectors on which they are bullish?
Say if somebody is not very clear, and this happens very much when it comes to pharma and IT, which I said are the evergreen sectors. Even if there is a pandemic, if there is not a pandemic. But what happens is, in order to understand and evaluate which company on the pharma front is good, it is a very complex process. There are so many things. What is the kind of research which the company is into? What the kind of pricing, the markets, the US FDA, the local market, and so many things are so complex that it might be very difficult for somebody to comprehend. And the best way to enter into it is through the mutual fund route, and that is what we tell everybody. And so many of the pharma sector mutual funds have done fantastically, phenomenally well. And that is the way to participate both in pharma and IT. In IT also, the valuations which are ascribed to different companies, the kind of work which they do, the realizations which they can make, the markets which they are into, those things are quite complex. And the technology part, how well those companies have been able to adapt to different technologies, that is also something which is quite important when it comes to say the IT sector. So for both these sectors, the best way to enter is through the route of going through the mutual fund route, which does the best for the investors.
Okay, right.
સવાલ જવાબ ચાલે છે પણ કઈ આપણું સાંભળતું નથી. હું એને આગળ ઊંચી કહું કે હું કરું છું પણ એને ખબર નથી પડતી.
હા, બોલો બોલો, આપ મને સમજાય છે.
હેલો,
હા, બોલો બોલો બોલો.
તમને can I ask one question about NPS and recent NRI?
Ah, definitely. Please go ahead.
My son has recently shifted to USA and he has the corporate account. He has left his company in India last year. Okay. Now, can I continue his NPS account? He is 47 now. I have another 13 years. Can I continue his account? And if I can continue, how can I pay through the company or I can pay individually?
So as far as the account which he was holding through the company, he has already left his job, right?
Yes.
In India. So that account cannot be continued. That account would get frozen in the sense that those investments would appreciate and would mature at the time when those certain age limits are reached. So that is an account which is an employee's contribution kind of an account. So that account
No, it was mixed. In contribution was from employee and from our end also, from employer and our end also.
Right. But that account is a different set of account, which
I
is,
see.
yeah, that is a different kind of an account. So
Now, how do we go about now? We cannot pay in that account, is it?
no, we cannot pay. We cannot.
Okay. Now, how to shift it to all citizens, all Indian model?
Sorry, I couldn't get you. We are talking.
How can we shift that account? Because NRI, as an NRI, I can shift that account to individual, or no?
That is an account where those contributions are employers and employees, both contributions are there. So
Right.
that is an account which cannot be handled in the manner that an individual would open. So that account would stagnate after he has left his employment. If he would have joined somewhere else, then it could have continued somewhere else in India. But now when
he has gone abroad, no?
Yeah. So
that question does not arise.
Exactly. So now that account has to remain the way it is.
So we need not pay anything. It will continue up to another 13 years and then mature.
Exactly.
And we cannot pay anything at this level.
Yes.
And if he has to, can he open another account or no?
No, he cannot open another account.
That is also not possible. Shifting is also not possible. Okay. So we have to leave it as it is.
Exactly.
That is the only way out.
Yes.
Nice. Somebody suggested that is your individual account and company has nothing to do with it. You can pay the money as your individual through another POP. Is it possible? I have my own doubts.
No, it is not possible. It is a separate kind of an account. The individual, when they open an account, it is a separate kind of account. And when it is an employer-employee contribution account, it is a separate account.
I see. So we have to leave it as it is, nothing to be done.
Exactly.
And will it not be, how will it mature then after 13 years?
It is as per the conditions what have been mentioned in the account, that you will get either a pension or a lump sum or a combination of both.
That is okay. I mean, but it will continue or it will be frozen or it will be dead or it will be, the money will go. That will not happen. That's all is my worry.
I will make it clear. Today that account is in the frozen state, and after completion of a certain period of time, which is whatever is the age limit when the account is supposed to end, at that time you will have an option. Either you can commute those pension or receive a pension on a year-to-year basis. But today that account is frozen.
I see. Okay. I thought I will be able to shift it to all, individual model. It is not possible. But then after 13 years also the intimation will go to the company or it will come to individual?
It will come to individual as well.
As well. Okay. Fine. Then it is okay. Thank you.
Okay.
We have got two more sectoral questions. The first one is about the agriculture sector. Considering the current scenario of the new legislation that are going to come and the protests, what is your take on the agriculture sector? And secondly, which sectors do you think will slow down in the coming times?
The first part of the question, which is the agriculture sector, I understand that the agriculture in India, if these farm laws and the way the government is thinking would be at a different trajectory, and it would not be at the mercy of the government and those subsidies, whatever has happened all these years. And the entire way the agricultural activity and the operations are carried out in India will be on a different scale, on a different footing, and the entire scene would change. This is my take on agriculture. if these laws are by and large not diluted the way they have been enacted, and the vision of the government is clear of what I am talking of. Then the next part of the question, that which sectors will slow down. If the health related issues in the country get settled in a decent manner, in another, say, in the decent manner, I would mean that in another 3 to 6 months time, a substantial portion of the economy which really matters would get the vaccination, then all the sectors, the entire economy will be booming, and all the sectors, right from the most battered sectors, which is hospitality, aviation, or anything for that matter, travel, even those sectors will start doing good. But if these things get prolonged, obviously the first hit would come to these sectors, then it will go downstream into sectors like infrastructure, autos, and quite a few sectors. But as I said, that pharma, IT are the sectors, and to a certain extent FMCG are the sectors which are all season sectors. This is my take on these sectors front.
Okay. Then we have a question for insurance for NRI. Is it worthwhile for NRIs to opt for an insurance plan in India? And if it is worthwhile, then what should be the ideal term of a term plan that NRI subscribes to?
Okay. As far as the NRIs are concerned, the best way to invest in India, and for especially for those countries, the NRIs of those countries who have a good deal of compliance to be made, say a non-resident Indian of UK or US, if they invest into India through the insurance route, into unit-linked insurance plans, what happens is that their corpus of investment from debt to equity or equity to debt, or maybe part of it up and down across a period of 10-15 years, would not attract any compliance whatsoever in the intervening period. And those investments would be tax-free the moment there is a 10 times insurance of the first premium, which is obviously there by and large. So that is a very good attractive route through the unit-linked insurance plans, that somebody can invest into India, into debt or equity, or both, or maybe, as I said, move from one asset class to another. That is definitely a route which is worthwhile. For non-resident Indians who are situated in countries which are which are not the developed markets, they are in the developing markets, buying a term plan in India is definitely worthwhile, because if something goes wrong in the country where they are, the first place it would come up in their mind would be India. And definitely buying a term plan in India would be quite worthwhile, and the amount of insurance that one should be going for should be commensurate with the kind of incomes which somebody is able to generate in their home country. So for developed markets, ULIP kind of a plan is worthwhile. For developing markets, the term plan kind of an insurance is definitely worthwhile.
Including Middle East, right?
Including Middle East.
Okay.
Good evening, sir. I would like to ask a couple of questions. So my first question would be on the taxation part for the NRIs. So the long-term capital gain as well as the short-term capital gain is applicable to NRIs. But does it make difference whether an NRI is investing from an NRE account or an NRO account? So what is the basic difference? Does this have an impact on the taxation part? And my second question would be on the direct equities. So can an NRI open a normal demat account like an Indian resident individual can happen, or is there any specific mode or process through which only they can operate a demat account in India?
So you got two questions. The first question being that the investments either from a NRO or NRE account, would it make any difference insofar as taxability is concerned on long-term or short-term capital gains, right? It would not make any difference. The only difference it would make is that if it is invested from NRO, it will go back to the NRO account along with the profits. If it is from NRE, it will go back to the NRE account. So the only difference would be that after the monies are received, one account would be repatriable, another account would not be repatriable as such. But as far as the taxation part is concerned, short term, long term, it will not make any difference. Whatever is the kind of levy of tax would be the same. So that would not make any difference whatsoever. But the only thing which somebody can do is that at the time of investment, those NRO funds can be converted into NRE under the $1 million US scheme, wherein NRO money can be converted into NRE. So after those investments are made from the NRE account itself, the profits along with the principal will come back to the NRE account, and those funds can be immediately be repatriable if wanted, or it can be invested into an FCNR account also. So that is something which can be done, but as far as taxation is concerned, it doesn't make any difference whatsoever. Now, the second question is regarding investment in shares. So if somebody is investing on a non-repatriable basis, then our demat account, which is the demat account which is akin to resident Indians, that kind of a demat account where the status would be non-resident, but it will be a non-repatriable status, and shares can be traded freely in that account. But if NRE account is an account where those funds are supposed to be used for buying of those stocks, then it has to be through the PIS route, which is the Portfolio Investment Scheme route, where one needs to have a NRE PIS account, and there are certain caps as to in certain stocks, non-residents are able to invest only to a certain threshold. So that is the kind of restrictions would be placed when it comes to NRE PIS account. And the funds from the NRE PIS account, it will go back and forth from the NRE account. So this is the way investments into direct stocks can be made by NRIs. Okay.
We have one further question on NRI taxation. If there is an NRI who has stayed outside India for a long period of time, say 10 years, and if he is returning back to India between April and September, then will his income be taxable in India during that particular year?
So for all these 10 years, that non-resident Indian was outside of India. That is what is the assumption that we have to make.
Yes, yes.
When is he returning back to India?
Between April and September. That is what he has stated in the chat.
Okay, April and September. So the moment he is in India for a period of more than 182 days, then that person would become a resident Indian under the Indian Income Tax Act, and the Indian incomes along with the global income would be taxed in India, but he will get the benefit of the double taxation avoidance treaty, that if there are incomes which are taxed abroad, they would not be taxed once again in India, or they would be taxed in India, but he will get a set off of whatever taxes which have been paid abroad.
Okay. And we have another question on insurance. So as per your opinion, what should be the percentage of allocation of the income of an NRI towards insurance in India?
Say the allocation of insurance as a means of investment planning is something where whatever he wants to invest into equity or debt in India, it can be through the route of insurance. So if I want to allocate, say, 1 crore of rupees of investment into India, a good route could be through investing through the insurance route of unit-linked insurance plans. So whatever my investment allocation otherwise would have been into direct into equity or equity-oriented instruments like a mutual fund or maybe direct equities, those investments can be routed through the insurance route so that it becomes a tax efficient way when it comes to developed markets, because there the compliance issue can be taken care of. And when it comes to term plans, it all depends upon the level of earning and the human life value which somebody holds. So if somebody is earning a certain amount of money, the insurance would be at a certain level. But then if he is earning something which is extra and beyond, that human life has a larger value and a larger amount of insurance is something which is required.
Hello, good evening, everybody, and thank you so much, Daxesh sir, and the entire team of Ashutosh Financial Services for arranging such a good series of interaction with all of our clients and the participant. We welcome all the participants, including Amish Bhai and Jain Bhai. Good to see you here in this session. My question is myself Prem, and my question is related to returning NRIs. And I have seen many of the contacts have said that they have came to India, and it's been 2-3 years they are in India, and still they are holding NRE account, and they are renewing their NRE FDs. And so what actually they should consider when they are planning to settle here in India, and with the intention to settle for an uncertain period. So what changes they should be doing into as far as their income tax regulations are concerned, and as far as the banking regulations are concerned. Thank you.
Right. So here the question involves basically two laws simultaneously. One is the Foreign Exchange Management Act, and the another one is the Indian Income Tax Act. The Foreign Exchange Management Act says that if somebody is coming to India and that person takes up any profession, vocation, or that person demonstrates the intention of being in India for an uncertain period, then that person would become a resident Indian the moment that person comes to India. So if that person comes to India, and as I said, he fits into all this taking employment, business, or staying in India for an uncertain period, then he should technically close down his NRO, NRE accounts, for the reason that under FEMA, that person is no more a non-resident Indian. And when it comes to the Indian Income Tax Act, the Income Tax Act squarely works on the number of days of stay in India. So whatever is the intention, whatever is the kind of activity that you do, if you are staying in India for a certain number of days in a particular year, then that person would become a resident Indian under the Indian Income Tax Act. And the moment that person becomes a resident Indian under the Income Tax Act, that person is supposed to offer his global income for taxation in India, and whatever is his income abroad has to be aggregated in India and taxes have to be paid. And as I said in the answer to the earlier question, one would get a set off of whatever are the taxes which have been paid outside of India when somebody is supposed to discharge the Indian tax liability.
One of the participant wants a little more clarity on one of the previous answer, which was regarding the difference between investing in Indian shares, Indian equity, direct equity by way of NRO account and by way of NRE PIS account. Can you please explain the taxation and the compliance difference between the two routes of investments?
As far as the taxation part is concerned, it doesn't make any difference. The moment somebody is a non-resident Indian, the kind of taxation which happens in case of equities is the same. It doesn't make any difference as far as taxation part is concerned. The only difference is that when somebody is buying shares, and if they are buying on a non-repatriable basis from their NRO account, then those demat accounts would not be hit by the limits which are there in the PIS account. If it is an NRE PIS account, then as I said, it is subject to certain limits for the non-residents to invest in it. But when those investments are from NRO account into a demat account, which is a non-PIS account, where the status of the non-resident is non-resident, but it is akin to a resident Indian account, the funds will flow from the NRO account to the broker and shares will go into the demat account. While as in the NRE PIS account, funds will go from the NRE account to the broker and shares back and forth from the NRE PIS account. So that is the basic difference. The taxation remains the same in both the accounts.
Okay.
Hello. Sir, as you said before, interest rates are declining in India. So now is it still worth to keep NRE FDs? And if not, what are the alternatives for that?
Okay. As far as NRE FDs are concerned, I have always been saying that when it comes to non-resident Indians of developed markets, it doesn't make a great sense investing into NRE fixed deposits or NRO fixed deposits in India. The reason is that the real interest rate is by and large the same between those developed economies and India. The only differential is the inflation differential. So today, India, the State Bank of India would offer 5.4% on a NRE fixed deposit, while as in US it might be say 0. But India is definitely running an inflation of at least 5%. So the real rate of return in India and US is by and large the same. So it doesn't make a great sense investing into a NRE or an NRO kind of a deposit in India, especially for people who are in the developed markets. For people who are in the emerging markets, maybe in Africa or a Middle East, they can invest into India, and it is something where they can keep this money for safekeeping in India. And those FDs are something where they can make a certain level of allocation beyond those investments into growth-oriented assets, whereby they can participate in the India growth story. So that is the extent of investment which somebody can make into NRO and NRE fixed deposits, even at these lower rates, as you were asking.
We have a question from a US tax resident who is asking that if he is interested to invest in Indian mutual funds through his NRO bank account, then does he have to provide his US tax identification number to the authorities, Indian authorities?
The moment if you are a US tax resident and making investments in India, one thing is very clear, that your global income is supposed to be taxed in US. So the moment you are investing from the NRO account, those accounts and those informations, because NRO account is an account which can only be opened when you give requisite proofs that you are a non-resident, and on that basis only an NRO account can be opened. So one should ideally plan, and that's the way we would advise that everybody should plan, is that they should not hesitate to give any information which is required, and it is required for the Indian banking and investment and tax related authorities for the US related information, and they should disclose the Indian incomes in US at the time when they are filing their US tax returns. So Indian authorities or Indian investment authorities can definitely ask these questions, and one should gladly provide, and one should see that these incomes are disclosed while filing their US tax returns.
Okay. Can a person simultaneously hold certain shares through his NREPIS and certain other shares through his NRO account in the demat account?
Yes. Yes.
Right. Then as far as the person who is returning to India is concerned, between April to September, as we recently discussed, and if that person receives gratuity in India from his employer during that period of time, then is that amount taxable in India?
So that person was outside of India and now returning to India.
Yes, he is returning between April to September, and he would have naturally crossed 182 days. And he receives gratuity in India during his stay in India.
Okay, and that gratuity is in respect of his employment in India or outside of India?
Can you please reply through the chat option? It's outside India. Okay.
Outside India. Okay. So that income, which is even outside of India, would be subjected to taxation in India, because that person becomes a Indian tax resident. So whatever are the taxes, as I said, and I repeat, which are deducted on that gratuity outside of India, they will get a set off in India. But because whatever kind of income of whatever nature is received, the moment that person becomes a resident Indian, it is liable to taxation in India.
Okay.
I think we can take a last question and then we'll close the session, if there is any.
Okay, one quick question. Under what circumstances NRI shall file his income tax return in India?
The first and foremost thing is that if somebody has income which is liable to tax in India, one should file a tax return. That is one. Number two, if somebody wants to claim a refund of the taxes that have been deducted in India, and as such is not liable to tax, in order to claim a refund, one should file a tax return, or one can file a tax return. He can forego the taxes which has been deducted at source if he doesn't have any income which is liable to tax. We come across through cases where people say that this is the small amount of tax which has been deducted, but as such, my income is not liable to tax in India. So then he might not rather go for filing the tax returns and forego those taxes. So these are two scenarios. The third thing is that there are certain expenditures, if they are made in India or they are paid by a non-resident in respect of certain amount of electricity bill, expenses on travel, those expenses, if they are made in India, then mandatorily anybody, whether is a non-resident or a resident, they are supposed to file their tax returns in India. So there are three scenarios. Either you have a taxable income, two, if you want to claim a refund, or three, if you have incurred expenditure on, as I said, electricity or travel, those kinds of expenditures, if you have incurred, then in these three scenarios, somebody is supposed to file the tax returns or would be required to file the tax returns. But merely holding a PAN number would not necessitate somebody to file a tax return in India. Okay, I think we'll close the session now, and thank you very much everybody for participating in the session, and we'll meet next weekend, and thank you very much for participating. Thank you.